This week in the world of Micron Technology, the story isn't just about strong performance, it's about a company making massive, multi-billion-dollar bets that could define the next decade of artificial intelligence. With reports that its entire 2026 supply of high-bandwidth memory is already sold out, the company is responding with one of the most ambitious manufacturing expansions the industry has ever seen. But with so much capital on the line, is Micron positioning itself for a supercycle or setting the stage for a future supply glut? Welcome to TickerWatch News for Micron Technology, Week 9, 2026. This episode will cover the major news and developments for Micron as the company navigates unprecedented demand for its memory products, driven by the global buildout of AI infrastructure. While specific weekly numbers can be volatile, the broader trend for Micron stock has been one of exceptional strength. Over the past year, the stock has gained over 300%, significantly outperforming the broader semiconductor market. This momentum reflects a fundamental shift in the memory industry, where tight supply and soaring demand are creating a powerful tailwind for the company. The market's reaction this past week continues to be influenced by a wave of bullish news centered on AI demand and the company's strategic investments. The biggest headline of the week was the official opening of Micron's semiconductor assembly and test facility in Sanand, India. This is India's first such facility and represents a major step in the country's ambitions to become a semiconductor hub. The plant, a joint investment with government partners totaling around $2.75 billion, will convert DRAM and NAND wafers into finished products for customers worldwide. Micron has already begun commercial production and expects to assemble tens of millions of chips there this year, scaling to hundreds of millions in 2027. This expansion strengthens Micron's global manufacturing footprint, complementing its planned investments in the United States. Fueling this global expansion is what the company describes as a historic memory supply crunch. Reports this week confirmed that Micron's entire 2026 supply of high-bandwidth memory, or HBM, is fully committed to customers under long-term contracts. HBM is a critical component for AI accelerators used in data centers. In response to this demand, Micron has outlined plans to invest approximately $200 billion through 2030 to expand its manufacturing capacity, with major new factory complexes planned in Idaho, New York, and Hiroshima, Japan. This represents a massive bet that the AI-driven demand for advanced memory will remain tight for years to come. Adding to the momentum, the company also confirmed it has started shipping its next-generation HBM4 products ahead of schedule. This early rollout puts Micron in a strong position to capture a significant share of the growing AI market, competitors like Samsung and SK Hynix. Finally, in a vote of confidence from the financial community, S&P Global Ratings upgraded Micron's credit rating to BBB. The agency cited stronger growth and profitability, driven directly by the expanding sales of high-bandwidth memory and other premium products for AI applications. The market sentiment for Micron is overwhelmingly bullish. This week saw a continued stream of positive analyst actions. Morgan Stanley, Deutsche Bank, TD Cowen, and Needham all raised their price targets, with some analysts now forecasting a stock price of $500 or more. The consensus rating among dozens of analysts is a strong buy. This optimism is rooted in the belief that the current demand for AI memory is not a temporary spike, but a structural shift. The narrative is that a memory supercycle is underway. Investors are weighing the incredible earnings power in the current supply shortage against the long-term risk that the massive planned capacity expansions from both Micron and its rivals could eventually lead to an oversupply phase. But for now, the focus remains on the historic supply crunch and Micron's prime position to benefit from it. From a fundamental perspective, this week's news reinforces the story of a company undergoing a major transformation. The most interesting aspect is the company's valuation. Despite the stock price surging over the past year, its forward price-to-earnings ratio remains in the low double digits, around 12 to 13. Many analysts consider this to be inexpensive, given that earnings are projected to grow by over 300% this fiscal year.
The key debate now centers on the long-term impact of the $200 billion planned capital spending. This massive investment is intended to secure future growth, but also raises the stakes. These projects will heavily influence free cash flow over the next several years. The success of this strategy will depend on AI infrastructure spending continuing at its current pace and on the memory industry remaining disciplined as new capacity comes online. This week's news solidifies the narrative of a higher margin product mix, but also highlights the financial commitments required to maintain a leading position in the AI hardware race. Looking ahead, the most significant catalyst for Micron will be its fiscal second quarter earnings report, which is scheduled for March 18th. Investors will be listening closely for any updates on HBM production ramps, pricing trends, and the company's capital expenditure plans for the remainder of the year. Beyond its own earnings, market watchers should monitor announcements from competitors Samsung and SK Hynix regarding their own HBM roadmaps and capacity expansions. Any signs that they are accelerating their timelines could impact the supply-demand balance. The bull case for the coming weeks is that tight supply continues to drive prices higher, and the earnings call on March 18th provides further evidence of sustained high-margin demand. The bear case would be any commentary that suggests a cooling in AI spending, or that competitors are bringing new supply online faster than anticipated, potentially easing the current supply crunch sooner than expected. Thank you for tuning in to this week's episode. Please note, this podcast is for informational and educational purposes only and does not constitute financial advice. We encourage you to subscribe, leave a review, and share this episode. Join us again next week for another TickerWatch update.